about the Big Mac Index. We're going to be talking about SKE resources. Golden Lion had an interesting news release we want to talk about. Small caps are still rocking. We're seeing a bit of a bid for some of the psychedelic deals. And what else have we got going on here? GM had some news in the last couple of days. And on top of that, some level jump news. AYR Strategies just announced that they're going to, Canaccord just raised their price target. We're going to get into that and more. All right, let's hit it, baby. Jason Lutz. How do you do, Lutz?
Oh, I'm exhausted. It was a busy morning.
I don't know how you do it. People don't realize that Jay gets up. He has 15 writers under him, and he yells at them because he gets his whip out and he whips them to write those 15 articles, and he just sits there drinking scotch. That's how it works, right?
Yeah, it's a team of little elves that have fingers that are engineered to type faster so that we can get content out every morning.
Well, but yeah, look, I appreciate the fact that you're getting up, you're crushing it. Lots of different stuff, and we cover lots of different sectors. You started out primarily covering cannabis, right?
Actually, my first 2 or 3 articles were not on cannabis, believe it or not. But I really started out just going wherever the hot sector was at the time. It was cannabis, so that's how I became so well versed in the cannabis space.
So you founded the Deep Dive. I came in around 2018, 2019. We agreed to be business partners before we even met in person, which is pretty fucking crazy when you think about it. The first time I ever found out about the Deep Dive and you was, I love small caps, I love micro caps. I was just always reading about these things. And there was an article you did about Canada Jet Lines, which was a really popular stock, low cost air carrier back in 2017, 2018. Retail investors, they really bought that story up, right? Like for one thing, it makes a lot of sense. Why can't I hop on a plane and go from Toronto to BC or Toronto to Florida for $250 and then pick all of those little services I want? Do I want a Coke? I'll pay for the Coke. Do I want a meal? I'll pay for the meal. Do I want to bring 1 bag, 2 bags, 3 bags? I'll figure all that stuff out. So, a lot of Canadians, they look at what's happening in the U.S. in terms of like the spirits and the Allegiance, Flair, I think is another one, or is Flair? No, Flair's Canadian, and it resonated with them. So you got this stock here called Canada Jet Lines, which has just this massive following because the retail investors, regardless of if I can make money on the stock, I want this idea to work because I like the idea of a low-cost air carrier that can send me on vacation. And so you were covering that. You were covering it very, very well. But you covered a story about how they were supposed to close on an airplane deal so that the company could actually launch. And then the next thing I know, there's a huge following, right? A huge following in the Sorry, can you hear me better now? My mic's better?
Yeah, that's a bit better.
So there's a huge following in the stock, right? You cover the story, and the next thing I know, the stock gets halted. And I go, okay, well, who's this kid? This Deep Dive? What's this about? So I end up going to your website, and I think this is all these are all clients that he's writing about. Like, what the heck? What's it? Because you got the corporate logos up, a lot of content, and I became kind of fascinated by it. And that was sort of how I first discovered you. Just before we get into all the news and everything, I got to ask you, what's the first story you ever put out where you kind of saw the link getting shared, lots of traffic coming in, that sort of made you go, I like writing about small caps. I want to do this.
Well, I mean, the story, but most of our followers don't, just in how I got started. I needed a means of secondary income. I had one small child and I had another on the way, and we were barely making ends meet, so I needed something. I've dabbled in web design and related fields in the past, and I mean, professionally, I have my bachelor's of business admin, which doesn't mean a lot to me. It's effectively a grade 12 certificate at this point in time. But
we don't need the full resume of like all your skill set. But what was it that drove you to go, CDAR filings look fun. I should write about these.
You know, it wasn't even that filings looked fun. What it was is I was interested in markets. I didn't have the funds to participate, but I followed along, and I needed a way of making ends meet effectively. At the end of the day, I was getting active on Twitter, and I was looking at it, I was going, you know, people are talking about all these stocks, but what they're saying is not matching what the company's literally saying in their filings. And I went, why is there this disconnect? What's going on? And then it really came down to no one actually knows what they own in this space.
So the idea was born from you reading filings and then saying, okay, there's a whole bunch of stuff that this company isn't saying in the filing that if you actually can read between the lines, you can actually understand what they really don't want you to know. And I'm going to write about that. Was that the idea?
No, it wasn't even that. It was that the company was saying things, but they were just filing them rather than announcing them per se, right? So, I mean, one example is management compensation, which a lot of people now focus on in terms of when these filings are made, they go, oh, hey, the CEO of this company that makes $0 made $300,000 last year. What did they do? And it's stuff like that. Canada Jetlines is one example where literally in their filings it says, by this deadline, if they don't have the funds, the deal's over. And to me, it's right there for anyone to see, but no one cared to look, even though they had $15,000 stored in the company, right? So to me, it's just this is arbitrage effectively of this is here, investors are here, they don't know what they own. Well, they're going to want to read about what they actually own, right?
It's easy to say that, but I think that for anybody who's sitting around reading this is probably going like, there's so much information overload when you read the news releases and you look at CDAR, that how do you compartmentalize it and structure it in a way that you can actually tell a story around it? Because like you would have had to actually read the accounting notes, right, to understand that Canada Jetlines had to close on that deal, no?
Absolutely, but part of the reason I brought up I have my business degree is because I am a serial procrastinator. I wait till the last minute on so many things, it's not even funny. And because of that, I've learned how to pick out the important data in anything. So whether it's reading a textbook, reading a filings, I can quickly discern which are the key points that are being made, while the rest is just fluff. That has to be there maybe legally, but not necessarily that it matters a whole lot, right? Like the going concern section of filings, is that important for large caps? Absolutely. But when we deal with small caps, to us, that's just boilerplate text. You quickly read through it, make sure that most things line up with what they should, and you carry on. It's not overly all that important. Now, it would be important if someone like Canopy Growth at this stage of the game had that in their filings. But when they were $1 on the stock exchanges and they're just getting started out, they had minimal, if any, revenues. You expect it, right? So it's just learning to compartmentalize what's important and how to pull that out to be quick, right? I mean, I was writing a story after working a full day, full 8-10-hour day at work, and then going home and writing a story. I had to be able to pull out that data quickly, remember it, to be able to do what I was doing.
What fascinates me about you, and I know you say that this isn't true, but I feel like you got a photographic memory where like you read filings and you just remember them. And that's, to me, that's what makes you more unique than anybody I know. Like I've been to microcap conferences and I've been around those weirdos who love microcaps as much as we do, but I haven't met anyone who is like a human encyclopedia of microcap transactions the way that you are. So I find that very fascinating, and I'm curious. Like, would you go out and let's say that you're you go to a bar with a buddy from high school, you're sitting there, somebody else from your high school comes by to say hi, and there's someone who you vaguely remember. how are you with names? Do you remember that person's name?
Not all the time.
Yeah.
In terms of filings, I remember it because I'm writing it, right? Like I have to read it in a way that I'm able to restructure what's being said in the filing so that it's interesting to a viewer, so that they can read it, get something from it, and be gone in typically a minute and a half tops, right? That's the attention span we have. So I have to be able to basically spit out whatever I'm reading right away. So as a result of that, you just start to remember the little tidbits. But I couldn't tell you what I had for breakfast yesterday or even this morning, really, because stuff like that doesn't matter per se, right? So you just learn to compartmentalize what's significant for what you do.
Speaking of names, we were chatting with Bruce Linton yesterday, which it was really interesting. First time I ever chatted with Bruce, first time Jay ever chatted with Bruce, and we had our whole video staff on. There's probably about 5 people on the call. Chris, our producer, is out of the Philippines, and Cassandra's out of small town Ontario. And it was really interesting. I got this feel from Bruce Linton that, and perhaps like, I don't know, when you're part of a microcap that becomes successful and you kind of become a celebrity, I don't know how much of it is like you start playing a role that people perceive you as, or if Bruce has always been like this. But I just got the sense that that's kind of how he is. It was interesting. He went around the room and was like, made sure to acknowledge everybody in the town that they were from with some sort of experience that he had in either that town or a neighboring town, to maybe kind of just have this sort of connection with them. It felt like something that, like, if you were meeting with like a U.S. president, that they like a habit he's developed. Did you kind of get that vibe?
Yeah, absolutely. I mean, I'll give credit to him in that after speaking with him, my views on him have changed. And I mean, he was actually extremely down to earth, which I was not expecting, right? I mean, he did a great job building a $1 billion company. He did return capital or get a return for shareholders, which a lot of people will disagree with. But I mean, early shareholders, there's no way they can be unsatisfied with the work he did. It's just reality, right?
I'd love to have Bruce on this show and just ask him questions about the Canopy experience, but I feel like it'd be really challenging to do so because,
you're always so limited to what you can say.
No. There's ways we see it as guys who evaluate securities. And then there's his way of looking at it as a guy who raised a ton of money, created a bunch of jobs, helped build a business. So what we view as a failure, he may view as a success, because from his perspective as a deal guy and the guy who built a business, that's, to him, he did a great job. But to us, we're a couple of guys who look at the stock market. We're like, yeah, you get a $70 stock. It's now worth $20. What the fuck? You know what I mean?
Yeah. And I mean, we take out of the equation the insanity that was the pot stock market at the time. And I mean, you and I have said it 1,000 times. Great business, terrible public company. It is two different things, regardless of what people want to say. It truly is two different entities. And that's really how you have to see it a lot of the time.
This is going to be a really bad analog, but I was watching Bill Maher last night. I finally got to get caught up on that. And he interviewed Kellyanne Conway, who was like, one of Trump's closest people in his administration, and just sort of going over. You could tell he was tiptoeing because he didn't want to spend the whole interview just arguing with Kelly over what Trump did that was successful and what was a failure. But I just feel like when you have somebody like that on who did, he built the what, I don't know if it's still considered the most successful cannabis company, but it certainly was. There was
one of, absolutely.
He was CEO. It was, and they're still positioned. Like, say what you want about them, they're still positioned like backed by Constellation. And if they want to take a big run at the U.S. space, who knows? Maybe they just funnel like $10 billion into Canopy, but that's probably too high because they probably can't raise that big. But they funnel a bunch more cash in, and they just take out a bunch of like the third and second tier operators, and they just have this massive MSO. I mean, everybody thinks that TerraSen's now going to be their horse as opposed to Acreage, but
I think it'll be brought together at this point in time.
Yeah. So I mean, like, it's still so early innings that Canopy still could very well be the leading horse in this race, depending on how the whole like regulatory side works out, who's able to raise capital, who has access to it. And, you know, like the thing with these MSOs is very few of them are strong in more than one state, right? Like most like, and that's like, we talk about C21 a lot because they've got like this really weird Twitter troll army that are all like, you know, little like crybabies. But that is a good operating store that I think you could tell an MSO story around if you wouldn't got a bunch of like naked licenses and put it around.
C21 to me is a perfect example of what I said not even 5 minutes ago. Great operating business. I'm not a fan of the public vehicle. Why? I've gone over 1,000 times. I'm not going to get into it really, but I mean, it's just two different worlds.
Like, let me give you a scenario here, okay? You put, you know, 5 relatively like naked licenses around it, right? You go grab one of the Florida ones. You go grab, you know, a couple things in Pennsylvania. You go grab, you know, some stuff in Michigan, and then suddenly you put that around this cash flowing business. You do a raise of you know, $50 million to take out whatever the cap structure is. You clean that up so all the free cash flow isn't just going to the CEO's hands. And now, like, what's like the difference between that and like half the MSOs?
Yeah, absolutely. I mean, if it works, it works, right? I mean, the trick is finding the funding. We know that.
It's also, you know, it's also one of those sort of like, my argument's also like, I could dunk if I was 8 feet tall.
Exactly. But
I think that the value right now at this stage of the game is that linchpin, which is the operating business, and you could build something very strong around it. But the thing that I find sort of fascinating, and I don't know why we talk about this company. Perhaps it's because I like torque, and so I always look at the small operators, the STEM Holdings, the Harbor Sides, the C21s. I don't even know how people say it. Consortium. I find all of them really kind of you know, fascinating. Let me pull this up here if we're talking about MSOs, even though we're supposed to be getting into the news here. I was working on this with my man Young Justin, so we can just sort of pull this up here. You know, you can kind of see here. There's not too many that are offering you all this torque, and I can already see some of these numbers that need to be updated. This is preliminary. I'm gonna make that warning here, but when I look at you know, some of these MSOs, or sorry, when we're trying to compile this data, the share structure on a ton of different like resources that pull these stats is all different. Like Justin and I find ourselves, and like I can already tell some of these are wrong, and I've got to go back and verify them because like we're pulling it from Y charts, you pull it from Reuters, you can pull it from wherever, but because the share structures are so complicated with these MSOs, it's actually like, so it's a significant challenge to figure them out. So now that I've said that, I mean, you can kind of see here, there's not too many names that have that sort of $100-200 million market cap that actually are operating businesses. And
say what you will, Planet 13. Oh, like Planet 13 to me just seems so overvalued at this point that they need to start doing acquisitions if they have a market cap of that. Because to me, without it, it's not going to get any better, right? Like they need to find a way to provide further return to shareholders, and I don't know how else they would do it with such a valuation.
That's why I put them in tier 3. It's because like the valuation doesn't line up, right? But and it's kind of funny. Like there's an argument to make. Like, well, look at Tilray. You know, Tilray traded with this massive valuation forever, but like Tilray didn't really work out. Like, what's the share price at now? I have
now it's just tied to it for yes.
Okay, so Tilray's trading it at $20, actually higher than I thought. I almost bought puts a while back when the stock was lower. Yeah, because it doesn't make sense, right? Like I didn't really get it, but anyways, let's move on to the news here.
Yes, there are some great news from clients, is what it is, but there's some great news this morning.
Which news do you want to start off with?
Let's start with Willow Biosciences, since we're on the topic of cannabis anyway. So Willow this morning, Oh, of course, I don't have it up. Oh, here we go.
I got it.
You got it? Okay. So Willow this morning had a major announcement. They are looking to commercialize THC. To date, they've been working on CBG, and that's largely so that they can get into U.S. and European markets because of the different legal status that has there. However, THC is not that far off from CBG at a whatever microscopic level it is, I guess. That's what I've been told by numerous people, not just Willow. So they're looking to do a pilot scale run later this year. To me, this is game-changing for Willow. And the reason I say that is while CBG is great from a health perspective, it's a lot easier for investors and consumers to see a path for the use of THC. In terms of the Canadian market, which is where they're going to initially focus, anything 2.0 product-wise, so that's your vapes, any type of edibles, beverages, they're all going to benefit from a consistent product, such as a biosynthesized THC, instead of an extracted product, which in terms of beverages has its own challenges itself in terms of dissolving the THC because of it being oil-based. But to me, the consistency they're able to provide for CPG with THC like this is just incredible. I think its RBC has a $1.2 billion market estimate for 2021 for the edibles market, just in Canada. Yeah, right there.
There you go.
Sorry, 2022 it's 1.2, just on a wholesale basis, and even more on a rec basis. Right now, I mean, they'll be focused on wholesale, obviously, because that's how they'll sell their product. But $750 million market just for 2021. There's so much opportunity there for Willow if they're able to get this right and get it commercialized this year. I think it's incredible.
So my take on Willow is I'm skeptical right now. And look, they're a client, so they do full disclosure. We are compensated to cover them on the deep dive,
and we are long.
Yeah. Okay, we're also long. I'm very skeptical that they're going to actually be able to pull this off. If they do, this story is going to have a lot of legs. It's going to have a lot of legs. But I mean, we've seen multiple companies come around and say that they're going to accomplish this, and
absolutely. Look at Kronos and their big investment and how that turned out, right? Willow's valued a whole lot less.
I got a call from a guy who was very, very instrumental in Kronos. He's he's one of the big investors in Gotham, and by proxy that makes him one of the big investors in Kronos. And he called me up after that acquisition, and he said the reason that Altria shoveled that money into Kronos was for Ginkgos. It's called Ginkgos, right? That is it. Like they believe in this opportunity so much. So I don't know if they're regretting that now. I don't really know what's going on there. But look, this is a real blue sky opportunity. And it's certainly worth having on your radar if you're looking for cannabis companies that don't need to shovel money into capital expenditure, that have clean share structures where management's aligned, and you buy into this sort of thesis of biosynthesis.
Yeah, I mean, I just want to outline the difference between the valuation of Kronos and the valuation of Willow, right? Willow's valued at, I think, $121 million right now. So, I mean, if they're able to pull this off, they'll quickly become a takeout target. And then the company might just be in a challenged spot in terms of trying to avoid being taken out now that they've got it all settled, right? So 2021 definitely looks like it's going to be an excellent year for Willow. And at this point, it, like you said, it's become the show me stage.
Yeah. And the nice thing I like about management is that management for a second, when we say to them, like, guys, we don't know how your story is going to work out. It's going to be dependent if you actually can commercialize this. They don't back down. They're like, yeah, we get that. That's fine. And that's what I like to hear when we agree to put coverage on it. And a shout out to Trevor Peters, who's also a Steelers fan. We had a nice one. Poor Cassandra had to listen to us talk about the Pittsburgh Steelers for 25 minutes yesterday before she got to do her interview. Is Ben Roethlisberger done? I don't know. We'll talk about some of the glory years. Okay, let's move on to the next news here. Level Jump. Russell Long this name into client full disclosure. This is a sort of telehealth story. What can you tell us here, Jay?
So this was a quick release put out this morning by the company, but by no means was it small. The company is looking to grow the revenues anywhere from 7 to 11% as a result of obtaining a new client. The client itself consists of 4 hospitals in, I believe it's Southern Ontario. They'll be providing primarily after-hours remote imaging services, essentially reading CAT scans and related. And I mean, it's significant enough that they did note that they've already hired people to be able to fulfill the contract. So Mitch Geisler, the CEO, seems to be chugging along with the story quite well.
I like Mitch.
Yeah, he's great to talk to. And I mean, this was a solid release. Not a whole lot of details in terms of sizing or anything, but that revenue growth, call it 10% if you want, somewhere in the middle between 7 and 11 there. That's great for adding a new client, right?
Mm-hmm. Okay, let's move on here. Up next, we have CYBN. We had Michael Auerbach on the show recently. He's like, what do you have to do to get on his list? Like he's getting all these cheap shares and like the best deals. It sounded like he seeded. I think he said MindMed, Compass, CYBN. That was one.
A tie.
A tie, but he did say CYBN as well. He said 4.
Oh, did he?
Yeah, CYBN.
That's interesting.
4. Yeah.
Or Compass alone would be interesting.
Yeah. So what can you tell us here, Jay?
So this was basically a quick update to a story we covered yesterday. Yesterday, they announced that they'd be doing a raise at $2.25 per unit, raising $20 million. And today, they upsized it to $30 million with a sale of 13.3 million units. Led by Canaccord, standard terms. There is an acceleration clause at $5 for that warrant. Warrants for a period of 3 years, but unless they hit $5 on a volume-weighted basis for 10 days. And I mean, with it being upsized, I'm willing to bet that that 15% over allotment option also gets fulfilled and they end up raising a little over 34.
Mm-hmm. Mm-hmm.
I'll be honest, I don't know a whole lot about CYBN, but I know some people follow it. So
yeah, look, that deal's it's been a very successful deal. I was chatting with a buddy of mine who's a small cap investor, a lobster fisherman out east, and he was saying that he thinks, and he's got a real good feel for the junior markets. It's a whole nother topic that we should really get into that he brought up that I thought was fascinating. But he's saying anything that's related to mental health, like these things are going to be around for a while. Trying to sort through what's real and what's just a promote that's going to be a challenge, because also a lot of these stories are evolving, right? Like, just because like today they kind of look like a promote and there's not a lot there doesn't mean that there aren't things happening in the background. And as a retail investor, I'd never encourage anybody to invest in those because, like, what are you investing in? But yeah, we should have somebody from CYBN on the show just to kind of learn about it. It's clearly a hot deal, lots of interesting stuff going on, and I'd love to hear more about it. But the other point that I just kind of wanted to bring up, and I'm going to actually ask the question. Are short sellers out of Canadian small caps? And what I mean by that is, let me make sure I spelt this right because I did it on the fly. Are short sellers out of Canadian small caps? So what I mean by that is, so I chatted with my buddy, lobster fisherman out east. Love the guy. I've known him for years. Like, the one thing we constantly talk about is how do you turn your brain off when you get around your family, because when you're obsessed with the stock market like we are, it's just like the engine never stops. It never stops. It's so hard to turn off and engage, and he's always on me about that. Anyways, that's a whole side topic. He follows the small cap markets really, really closely, and he brought up this point to me. He's like, it feels like there was a bunch of people that were fucking around in the market that were using algorithms and playing games to try to scare out retail, and they're all gone. Now, I don't know if that's a function of Biden winning and the Russell running and all the short sellers saying we're going to take a pause for 6 months. And I think I was talking to Bruiser yesterday. I think he said that there's only been like 3 short reports so far this year. But it does feel like a lot of these micro caps, if they start to catch a bid, they just really shoot. And it feels like there's just like the selling's just gone. Thoughts? You focus more on the news, but are you feeling that at all?
I've right now, one common thought I've had, I haven't even talked to you about it, but largely I feel like this is not the market to be a short seller in. It's with the way Robinhood has gotten in terms of the US stuff, it's just gone nutty as of late. And short reports come out, it doesn't matter how strong the merit is behind it, it just doesn't seem to do much, right? Even Penumbra? It's been tackled by some of the strongest short sellers out there, and it's hardly flinched, right? It's just not the right market to be a short seller right now. And I mean, the same applies for Canadian small caps. Are there stories out there that are probably going to be targeted in the future? Without a doubt.
Yeah, but so to be clear, his sort of thesis was, when you got a bunch of retail investors that are in these, junior names and, shares, small amounts of shares are going back and forth. It made it so that somebody who had a big book, who just wanted to clip a tiny profit, could go in and just bully these things, because it's like, it's like a lion showing up where there's a bunch of like baby deer running around, and they could just like basically throw the baby deer around. And those trading accounts and books and groups seem to be gone. And it could just be that risk is on, and they're like, okay, we're gonna go hang out until coronavirus is done, and maybe we'll be back sometime in the future. Maybe they got burned. I've heard mumblings that there's been some regulators looking into some of these things, but it does feel like there's just not as much selling in a lot of these small cap names as we would have experienced 6 months ago.
Yeah, I mean, maybe it's related to inflation for all we know, right? In terms of everyone seems to be getting money, whether it's CERB up here in Canada for those that lost their jobs, or stimulus checks down south, and it's going through the OTC markets. There's just not a lot of selling and a whole lot of buying because money's easy right now, in a lot of respects. Now, that's not to discount the struggle a lot of people are going through, but to me, right, it might just be a function of inflation. As much as we think that small caps are not impacted by the macro.
Yeah. So I guess the thought process there is that with inflation, higher inflation, we see negative real rates. Negative real rates mean that people have to go and chase real yield. The only way to get that yield is to go get risk. And risk is, these small caps, why the Russell's running. So yeah, that thesis makes sense. Okay, let's talk about Gold Lion. They reported results of geological physical survey at Erickson Ridge. What can you tell me here, Jay?
So this was interesting, and I'll actually get you to pull it up, because the part that I find interesting is, truth be told, normally geologic surveys or studies, anything of the sort, my experience with mining is not there for me to get excited about it typically. And I'll be blatantly honest about that, right? I mean, prior to this time last year, we weren't even looking at it. But if you want to scroll down a bit there, so at the firm's Erickson Ridge property, there has been, the full image there.
You want the image, okay.
Yeah. So at the Erickson property, there has been historical drilling and historical resource estimates. That was primarily done in the 80s, and the company hasn't said a whole lot about it. Gold Lion's optioned this property from EMX Royalty for I think it's 80%, but it could be whole, so don't quote me on that. But that little arrow there under the chargeability section you see, that's where it was primarily focused. And that area has. I can't see your mouse there.
A little arrow.
So under
chargeability. Here we go. Right here.
Actually, to the left and up.
Here.
So that's where the historical estimate was, and that was something like 200,000 ounces of gold. So now compare that blip to
Right here.
to right there, which
untested down dropped chargeability anomaly. I wanted to get Oliver on, the CEO, to talk about
I know you did. So in talking to Oliver about this release once it came out, he had mentioned that, like, I reached out and I said, hey, like, this chargeability map looks interesting. I'm not super experienced, but Oliver is, in terms of he's a geologist by trade, right? Also the CEO. And that massive anomaly has certainly piqued my interest, given the response that they got from that historical location that they did know. So the company didn't actually know about this anomaly, to my understanding, as in they weren't expecting it. So it could certainly be interesting going forward once they're able to get a drill in the ground there and see what they can pull out, just based on the historical estimate. Again, historical, not 43-101 compliant, but even still, it's certainly noteworthy.
Mm-hmm. Okay, it's look, I like Oliver. I love when I get to meet young guys in mining. We don't run into very many of them. There's like this real sort of gap that needs to be filled, and obviously when money flies into a sector, you're going to get that. But Oliver's a real dude. Ryan at New Lux is great, and I think that these guys are going to like make a lot of money being early, and after Gold's basically fell asleep and been in a coma for 10 years. So he seems to know what he's doing, and it's an interesting story worth following. Skena, they've reported assays of 9.1 grams per ton gold over. Well, that's a big result. 9 grams per ton gold over 49.6 meters at SK Creek. I know that Braden was following this story. What can you tell us here, Jay?
So yeah, they actually released a lot of results this morning for that property. However, I just put in the highlights because I didn't feel like having 1,000 rows of drill results. Highlights were great, though. I mean, as you mentioned, the strongest one was that 9.12 gold equivalent over 49.6 meters. To me, that is a great result. That's from within a boundary that they were previously unable to cross with drilling, just from historical work that was conducted on the property. This program was largely focused on infill drilling. However, it still produced some great results. So I imagine they'll be progressing steadily with this property at this rate. It's just been great returns despite historical workings being on site. But I mean, like they say, the best spot to look for gold is in the shadow of head frames, right?
Yeah. It's interesting. We've been chatting with the folks over at Sassy quite a bit, and this is what the heart of the Golden Triangle. Would that be accurate?
Pretty close to it, I believe. I could be entirely wrong, but off memory, it is, yes.
Okay, it's and this is also a company like that uplisted to the big board in the last like 12 months or so.
Well, I think in August they uplisted, actually. Okay. I can check that to challenge my memory, if you like.
These companies are
also August 20th.
Guy knows everything on the top of his head, and it's not even a name you really follow closely.
No, not at all.
It's a name I'm sure we're going to be hearing a lot more about as we continue to run in this gold cycle. Any other news that you want to cover today? Here's one: AYR Strategies. They got their price target raised by Canaccord. There's a sell side analyst story on the deep dive. That's a job for one man and one man only, and that man is young Justin. So I got to look at the author. What can you tell us here, Jay?
So another one out by young Justin this morning, covering Canaccord and their price target changes. This one was actually done late last week. I just didn't get the time to publish it. It's been nuts the last while. So this upgrade was relatively in line with the upgrades that Canaccord did for Cresco Labs, TrueLeaf, and Curaleaf off memory, just based on increasing the multiples and such. AYR also got a bit of a bump on the basis of they have a ton of acquisitions that are closing in great markets.
Yeah, these are good acquisitions.
Off memory, they got. It's up there. wasn't even looking. Pennsylvania, Ohio, Arizona, New Jersey, Florida.
Their
Great.
IR girl, I found out, used to do IR for Ianthus, and I think she's pretty fucking good at her job. I love this. Like looking at their deck, it's just I have all the tools and information I need to just go, okay, I like this investment. This makes sense. Now the problem is that like you still got to actually like do a whole bunch of other diligence beyond looking at the back of a baseball card. But I think that this is a great little graphic.
It's an excellent start, right? Like you and I talk about it fairly frequently, just in the sense of a quality corporate deck is an excellent starting spot to do your diligence. Now the problem is finding a quality corporate deck.
So let me pull this up here. AYR strategies, and you can tell this is kind of fresh here. These are the graphics that the young Justin and I are working on. I spent all day Sunday, and my wife was pissed that I these pre-prepared sheets. But this is a name that I think this is going to be a first-year MSO after they put all this together and all this cash flow gets added in. Because to me, it's an interesting name, and obviously, like the big problem and challenge with doing all this stuff is that there's so many moving parts with all these MSOs, right? Like right now, I have AYR as second tier. This is like a real fun talking point that I think that a lot of investors on Twitter think that everyone's having a lot of fun with this. I think AYR is going to be first here after they complete all those acquisitions. A lot of top line, a lot of EBITDA, and that LHS acquisition, although it looked a little bit lofty, that's a real operating business. So they're going to have real operations in some great states.
Yeah, I mean, Florida alone, I think, presents a large opportunity for them. I mean, Florida is largely dominated by TrueLeaf, but it is what it is, right? There's still tons of opportunity in the state, and can someone really hold a 50% advantage for that long?
Yeah, what I like about AYR is that they came out as a SPAC, and they've gone out and they've gotten EBITDA, they've gotten cash flow, they got a bunch of real operators, they've consolidated them into a real operation, and now I look at this and I go, okay. This is interesting. I'd love to have them on the show and just kind of pry and ask questions, but it's certainly for those investors that are looking for best-in-class operators, which I think is the appropriate strategy for most. They're looking at this thing, they're going, okay, they're generating cash flow, they're generating EBITDA, so I don't have to wait for what's to come. This is a name that I want to back, and I think that it's certainly Canaccord puts out a lot of real sort of bullshit targets. I think that AYR is one that's going to be relatively interesting. So Jay just texted me and said he had to go to the washroom. Told me that he's like, Steve, why don't you pull up that tweet there about the Big Mac index and riff on it a little bit. So this came out from George Gammons over the weekend. It's standard index. Let me pull this up here. It sort of looks at how much a Big Mac costs in different countries, from South Africa all the way down to Switzerland. We can kind of see Canada. You're certainly going to be paying a lot more for a Big Mac here than you're going to be paying in say Turkey or Russia. Probably a good thing for me, because if Big Macs were sitting in that $2 range, I don't know about you guys, but I'd be able to slam a bunch of them. But the reason that this index is so important, if you're kind of just looking at this and you're kind of like, okay, this looks silly, this looks stupid, is what it really measures is purchasing power, and it tells us, okay, where do I fit in terms of purchasing power parity with other countries? And we can kind of see, some people would say, okay, this is cost of living related. This is but I don't know that I necessarily buy any of that, because different countries also have different food standards. Like a Canadian Big Mac, I trust more than an American Big Mac. Look, guys, I hate to break it to you guys, but I like fast food. Okay, I'm no stranger to the Big Mac. In the U.S., I've eaten a Big Mac. I've got a little bit of bone in my burger. Never happened to me in Canada. So it's not really a perfect measure, right? Like, it's just different standards in different countries. But I think it does kind of give us an idea of how far our dollars go from one country to the next. Jay, you have any thoughts on either this or the delicious Big Mac?
One, I eat too much fast food, despite living 45 minutes from the closest fast food restaurant.
What's your favorite fast food? What's your combo? You get to pick a burger from any fast food joint, a fry from any fast food joint, and a dessert from any fast food joint. What do you pick as your three?
My three is a triple Baconator from Wendy's with onion rings from A&W, and I will top it off with a root beer float from A&W. That is my method of staying nice and fit while I work behind the desk all day.
I go with this is a tough one. This is a tough one for me because I've been eating a bit of Burger King lately, and I think
I'm not a fan.
I'm getting a little bit sick of the Burger King. I think I go Big Mac, and I go with Fry Supreme from Taco Bell. Anything else is just foolish.
Oh yeah, I can give you the credit on that one. That's a good one.
Yeah, you're kidding yourself if you're telling me that there's a better fry combo than the Taco Bell Fry Supreme. And then for dessert, I mean, I'd probably have to go with the Score Blizzard from Dairy Queen. No chocolate squirt. I got yelled at once. I said I want a Score Blizzard vanilla ice cream. And they put it in the chocolate squirt there, and they say this like 14, 15-year-old girl yelled at me. She's like, "You're supposed to say no chocolate squirt." Well, fuck. Like, what do you think I meant when I said I wanted vanilla ice cream? Here, I'm getting rained down in the drive-thru by a 15-year-old in front of my wife and kids.
Yeah, I don't like the chocolate added to it either.
Like they start doing it out of nowhere. One day I go to Dairy.
Yeah, right. I ordered it after not going for like 2 years. I was like, "What the hell is this?"
I like. To me, Dairy Queen's just vanilla soft serve is the best stuff going.
Yes, absolutely. In high school, we used to have competitions to see who could eat the most out of a 1 liter tub when it went on sale.
Yeah. But guys, let us know in your comments in the comment section. You get three. You get to pick a sandwich from any fast food joint, a fry from any fast food joint, and a dessert from any fast food joint.
We'll open it up. It doesn't have to be sandwich. The main course, right? Mm-hmm. So you could go with a burrito or whatever. Right?
I love me some Taco Bell, but I think that there's a reason that the Big Mac and the Golden Arches became #1 in the world.
Quarter Pounder's better than a Big Mac, man. You know what you do, though? Here's the best sandwich you'll have. Go order a double cheeseburger, junior chicken, open up the double cheeseburger, put the junior chicken between the two patties.
Someone on Twitter tweeted, the market will regulate itself. And then it was like that KFC sandwich where you got bacon in the middle and the two buns are actual like chicken breasts. And then there might have been some nachos in the middle. I think it was a KFC one. I forget who tweeted that, but that was a brilliant tweet. So let's talk about the Big Mac Index then. You know, I don't know that there's a whole lot to get out of this. You can just sort of see Canada certainly, in line with the Scandinavian countries. What I actually find interesting here is that apparently a Big Mac's more expensive in the U.S. right now than it is in Canada. I think that this would shock a lot of people to see that the U.S. has, the most. It's up there with the most expensive Big Macs.
I will say the first time I went to California, I was in San Diego, and we just arrived. It's late at night. We're on the way to our Airbnb, and we're starving. After those of you who live in the boonies like I do, I have to drive 45 minutes to Regina, then fly to Calgary, then fly to Vancouver, then fly to San Diego to get to San Diego. So it's a full day's travel. And first place we see is a Wendy's. We go in. I think it was double what I paid in Regina, Saskatchewan for a freaking burger. Like, I was blown away. And that's in US dollars. Like, I was not expecting that at all.
Yeah. You know what's expensive is A&W. You go to A&W and you don't have that coupon book, oh, they're going to ding you good.
You use the coupon book, you cheap ass.
Oh, yeah, like that's like, have you been to A&W and like ordered food for your family and not had a coupon book? It's like,
Yeah, I had it 2 days ago, man. Love it.
You prairie guys love your A&W.
Oh yeah, that's most small towns has one.
Okay, so let's wrap it up here because
We're talking gibberish.
I got a busy day. I mean, we're actually tomorrow. This is gonna be fun. Tomorrow we're gonna have I believe the CEO of the MSOS is MSOS ETF or MSO ETF.
I don't know. I'll be honest. I didn't look at the guest list.
I like we like, and this is why it's interesting for us to do this, is because we're so bottom up with the way we look at things that when we see these debates going on about inflows coming in from ETFs and just sort of looking at that sort of top down look of portfolio management, like guys, I'm naive. I don't know anything about that. Jay and I, we read CDR filings, we look at cash flow statements, balance sheets, accounting notes. That's sort of our way of making sense of the market. So to understand how these flows work, I think is really valuable, and it's probably a show worth watching if you're in the cannabis game and you want to understand how these work. Feel free to join in and ask questions in the comments tomorrow, because I think it'll be worth watching. So Jay, what else do we have going on the dive today?
On the dive, well, we discussed the article that came out right before, which we normally don't get to, which was AYR strategies being upgraded this afternoon. Some macro, as always. I don't know that I'll get a piece out by Jim McFadden or not. Kind of depends. I've got a busy afternoon as is.
That's right.
I don't know that I'll get to edit that one yet or not, but we do have some macro from Hermina Paul, as well as on the daily dive, we have David Lesser from Power REIT.
Okay. Yeah, he was on yesterday. He
was on yesterday. He kind of digs in a bit more on things, and
you guys are getting a double dose of the David Lesser. Not a client or anything, just an interesting story. An NYSE cannabis listed REIT. It's fascinating. $50 million market cap as opposed to the $5 billion market cap IIPR. He's trying to fund his deals through what's it called, rights offerings, which is really interesting. Very shareholder friendly way to get cash on the balance sheet. Jay, you got a disclaimer for us?
I always do, buddy. We're entertainment purposes only. I have no financial designations or licenses, and neither do you, Steve. So,
and that's basically it, guys. I appreciate everybody who took the time to join us today. Tomorrow we got a big show. Going to talk some ETFs, and hopefully we can provide some value for those of you looking at the cannabis space. Thanks for joining us. See you guys tomorrow.